Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about mortgage demand falling, rumors of Netflix buying Roku, and the death of Affirm Holdings. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Interest rates are still on the rise, and this has translated into mortgage demand falling to a 22-year low. What does this mean for the housing market?
Well, it's kind of crazy, right? So we had the housing market do its huge run up after a decade of interest rates sitting around zero as far as the federal rate, which translates into a mortgage rate of around, two and three quarters to 3%, right? So there was that whole decade you had to refi to lock in these rates. And if you remember, you're locking these in for 30 years. So even if we average 4 to 5% inflation, if you refi during this time, you have locked in an unbelievably low rate. That was kind of what we were talking about for a decade. But that ship has sailed and is now gone, and you can't look back and beat yourself up if you didn't do it. But certainly if you're paying your 2.5% mortgage off, fast because you want to pay your house off, I mean, seriously, stop. Right. This money is cheaper than you will ever probably see again. I mean, it was unbelievably cheap. I mean, it's up to you. You can pay your house off if you want, but if it's sitting there at 2 to 3%, just really think about the math behind that one. That's all I will say there. But the housing market, obviously, we're in a kind of a crazed environment where you have to pay cash. If you're getting a more, that's one reason the mortgage demand is falling, right? Because people are dejected right now because they have to pay cash to buy a house, or they're getting in a bidding war of, the house is listed for 450 and the realtor's telling you need to offer 480 in cash to even be competitive. And you're like, what? But it's kind of a new reality. But the good news is that's all coming to an end. And it is. When rates rise, mortgage rates also rise along with it. And therefore, the housing market's going to slow, lowest level in 22 years. If you're not seeing that as it's going to affect the housing market, you're just being blind, right? So somebody said the other day at a conference I was at actually last week, they said this is probably the worst time in history to buy a house. Wait 6 months. just wait 6 months. Now, not everybody has the ability to wait 6 months, but realize that if you buy now, 6 months from now, unless you are on a screaming hot market, you're probably going to be upside down to the tune of 5, 10, 15% in your home that you just bought, that you just bid for to pay up, and you probably know you shouldn't, right? So anyhow, there's times where you kind of have to buy, and I get that, but if you can wait at all, just wait, right? Let this whole thing cool off. You won't have to play these games that we're playing right now that all of a sudden, everybody's in a frenzy to try to get you to play, telling you have to. Just take a pass, if you can. So overall, I think we're going to see the housing market come in, even here in Austin. I think it's certainly going to level off, if not come in some. So just buyers beware out there. And if you can wait, you should wait a little bit.
Next, Roku stock is on the rise this morning after rumors of Netflix buying Roku. Do you think this will happen, and how will it affect the stock?
I'm not really a fan of either as far as the trying to find the article here. It's right there in the middle. It's just a small blurb if you can read that. So yeah, I'm not really a fan of either. I mean, I think the streaming services are challenged across the board because it's so competitive to get new and better content. And, the prices that they're having to pay for that content. And then you have, the subscription models that it's tough to raise your fee without people leaving. And, of course, Netflix talks about, how many people are basically stealing off of somebody else's Netflix login. The market seems kind of saturated. I mean, maybe there's enough younger folks out there that are new subscribers now that are moving out of their parents' house that had it, who now they're hooked and they have to have it on their own. I mean, I can buy these as a, thesis to own it, but certainly I wouldn't touch it myself. When you look at Roku, I think, Roku going up 8% this morning or whatever it turns out to be here once this chart loads. But yeah, I think this would be a great time to sell these shares. Take the profit if you bought it short term, or take the loss if it's longer term. It looks like the chart's not going to load here, but Well, there we go. So let's go to a 6-month chart. That's where you are in 6 months. It was up at 250, at the end of the 2021 down. Now it's bouncing up to 93 or 98 that you're seeing there. So it's, I would cut your losses here or take the money if you just bought this sort of thing and kind of head for the hills. When you look at some of the numbers, sure, it is profitable. That's good. 95 PE. That's a warning signal, right? So not a whole lot of reasons to own Roku here. I think Netflix is a little different animal. So if you believe in the long-term thesis, you can get in on it. But I'm not going to put any money behind it.
Last, payment processor of Affirm Holdings is down over 75% year to date, and analysts are saying it could fall another 40%. Is ticker AFRM a buy, sell, or hold?
Yeah, Affirm is a little bit challenged here. As far as I guess I have to log in to get to the full article. There we go. Okay, so set to drop another 40%. Nobody likes that, and then it gives you a big article of why they think it's going to drop another 40%. But really, the real story here is how far has it dropped, right? So once this loads here, you're going to see it's down. Go to a 6-month chart because that's particularly bloody. It was at 125. Now it's down in $23. It's dropped over 75% year to date. And then when you get down into the ratios and profitability, I mean, you're talking not just red numbers, but like big fat red numbers, right? So, sure. The only reason to buy Affirm Holdings here would be is if you think that they're so desperate that they're going to get bought. I don't think that, but they certainly could, right? Or there is a point when things are so cheap that you just have to buy in because it's so ridiculously cheap. But it's already fallen 75%. Some pros out there are saying it'll drop another 40%. So really, in relation to the 75%, that would be like another 10% using the old number, right? So it'd be down like 85% for the year. Whoa, right? So no real reason to own it. And as you heard yesterday, Apple's moving into this space. Apple's doing the delayed, buy now, pay later, which is exactly why people thought Affirm Holdings was going to be this huge hit. So when Apple moves into your space and your stock's down 75% and the pros are selling or saying that you're going to drop another 40%, I think it's time to find an off ramp, right? So these, I don't know what they're going to do. I really don't. I don't know if they're going to have any staying power here or what, but I think their stock is what I would call untouchable. So a hard sell on Affirm Holdings is what I would have to say.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.